Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me this morning at MarketSite is Alistar Wandesforde. He's the principal consultant over at DataArt. We're going to focus on institutions and digital currency trends. Alistar, thanks so much for joining us at MarketSite today. Now, institutional investors are typically prevented from dealing with digital currency. Why do you think that happens, and how can digital currency exchanges, or DCEs, and incumbent exchanges bridge those gaps?
Sure, yeah, that's a great question. So, there's a great opportunity right now in the cryptocurrency market, and institutional investors are primarily concerned with risk management. And I think one of the major issues that current DCEs need to address is the ability to provide those risk management solutions. They were basically built out originally as retail platforms, and as they evolve, they need to catch up and provide the same sort of certainty and confidence to institutional investors that the more traditional or incumbent exchanges would do. So that is something that they would do.
So what are today's exchanges mainly focused on?
They're mainly focused on trying to provide price certainty. They also want to make sure that they're regulatory and compliant. They also need to try to probably bring in people from the industry in order to sort of give them that depth of expertise that the sort of newness of their exchanges needs to evolve into in order to give that confidence to institutional investors.
Well, doesn't this type of centralization mitigate the original concepts that digital currencies were brought upon?
Sure, great question. Yeah, so in a way, yes, but the challenge today is that markets are already centralized. We have infrastructure for all of the things that we need in order for those markets to function properly. Going to a completely decentralized market, while technically possible, is a big leap for institutional investors and doesn't necessarily give them all of the protections that they need for the assets that they're managing.
All right, so what are centralized exchanges looking to solve for, and how are they evolving with their offerings?
So centralized exchanges are looking to, for example, partner with other, perhaps even incumbent exchanges to deliver technological solutions. So for example, Nasdaq and Gemini Gemini Trust partnered to bring Nasdaq's smart surveillance technology to their marketplace so that they would be able to monitor all of the trade pairings that were going on in their marketplace. So that kind of fast tracks the ability for these newer exchanges to provide that level of certainty to institutional investors with processes that are familiar.
All right, and to wrap it up, how much longer do you think it will take for incumbent exchanges to bring in new money and new digital asset participants? And do you think it's essential for driving the global digital currency markets?
I think it's a great question. It's absolutely essential. I think it will probably take some time. We're seeing some signs already with that happening. Coinbase, a digital currency exchange, recently set up a custody service. Making sure that you can take care of those assets in a proper way is very important. And with that happening now, we'll begin to see that institutional interest peak, perhaps over the course of the next year. That will also give time for the exchanges to really build out the infrastructure that they need to deliver that confidence. So maybe in a year from now, we'll sort of see a more robust digital currency marketplace.
All right, well, thank you very much, Alistar, for joining me at MarketSite. Thank you for joining me throughout the day. I'm Jill Malandrino, global markets reporter at Nasdaq.